Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 13th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. One thing I wanted to show is a couple of things. Number one, down here at the bottom, you see a very clear compression. Volatility has compressed tremendously. You can see back here in the mid to early March area and even after into early April, it was a much higher volatility state. Since then, volatility has crashed all the way down, and this is looking at a monthly type of basis, right? 20 days out, and right now you can definitely see that it's at the lowest point it's been. The 20-day range right now is super compressed. A couple of days back, it actually fired a compression signal of 65% below average, and that tells us that we could be looking at a multi-week breakout move at some time down the road whenever we see expansion. So that's number one. We could be looking at major expansion down the road or some significant move that may increase volatility over the coming few weeks. And given the fact that we have compressed like this here, it tells us here that we may have a chance to see expansion here pretty soon. Number two here, we saw selling pressure in the previous session. One thing to keep an eye on is this doji-like pattern here went offered late in the day, and it turned into a pretty significant stop run day down. The midpoint is at the previous session's low. You can see the previous month's close price here has been in play. That's the 28.82 halves. That price was taken offered, and now we've seen a pretty strong rejection of the previous session's close and low, and we're pulling back, offering a potential retest. If price pushes into 82 half or 28.90 in that zone, that could provide an opportunity for bears to defend and perhaps push this thing lower to recent support at around 27.70. So right now, that's going to be the key level to watch. Based off of how the overnight rejection has occurred so far, we've seen a pretty significant uptrend to the pre-market chart here, VWAP trending higher. Typically speaking, that can continue to catch fire, and we may see this thing push through the 28.80s and continue higher. So it could be one of these type of bounce back days here where it rejects the previous low, overtakes the mid, and continues higher. So right now, the level to watch is still going to be that 82 half. If price cannot find acceptance above that zone, that could be the optimal area for bears to sell for a shot at pushing this thing back toward 27.70 or perhaps even lower. All right, let's take a look now at the NQ. Spent quite a bit of time on the ES there. The ES mirrors the NQ as well. Very clear compression. On a 20-day phase here, we're not quite super compressed, but you can clearly see that the compression of volatility and that drop in volatility has been present. We're now almost back to pre-COVID levels of volatility here. But one thing remains here is we continue to see a very clear bullish trend up. We continue to see price honor the bullish PIMA trigger zone here. And we've only seen 1 to 2 day pullbacks, 1 3-day pullback here, but this could be interesting here to see how this plays out. This is another situation where the previous session's low and close were rejected overnight, and since then we've been seeing a trend higher the entire overnight and pre-market. Overall, this market is approaching the 9,200 level right here from below. That's about where yesterday's midpoint is after the sell-off. So any push into 9,200 could become a selling opportunity for bears looking for a return back toward 88.75s or perhaps 86.65s. So we could be looking at a move back toward this blue dot or perhaps this top of the pivot range line. So that's going to be the level to watch, 9,200. Failure to maintain acceptance above there could rotate this thing back toward the previous month's close or lower. But right now, again, this market has shown resilience. It has been able to bounce out of the PIMA trigger zone here time and again, and that's what's happening right now. got to keep an eye on 9,200 as the next key pivot above. All right, let's take a look now at crude oil. Again, watching the July contract here. This one has gone flat. Instead of a 20-day here, what I'll do is I'll change this down to a 5 period like that. Click OK, and what you'll see right here is this compression over the last 5 days. I guess that's not a good rectangle. That's a little better right there. And it's fired the last couple of days here, going to magenta. That's a 6-day range right now. Inside day right now compared to the previous range. We are still kind of holding right around that midpoint of that rejection day, and it clearly doesn't seem like rejection. It was just the edge that was set by both edges there, so that gives us the range to watch, right? 28's on top, 24's on bottom, compressing toward the apex of that pattern at 26. And 26 is going to be the level to watch here, because you know, any rally away from that level, a strong rally or strong selling pressure, will likely ignite the next breakout move. One thing we've talked about in the trading room is watching for expansion and to see if it can reach about 8 points. Right now 788 would be the 5-day range breakout. If we go up to 6 points or 6-day range by clicking the 6 here and going OK, we will see that it increases the range for us to 885 and gives us new measurements here. So by using the actual 6-day range here, 1, 2, 3, 4, 5, 6, even though this one's not done, you still see that, you know, you can get a higher measurement here. So whenever this thing breaks out, we have a good shot to see about 7 to 8 handles of movement of range. Remember, if it were to break to the upside and fail, then you can use the top end of that range to project lower 8 handles, and you likely drop there. Same thing on the downside. If it were to drop and say reject off 23s, you can go 23 and forecast higher 8 points, and that'll give you a measurement right at 31. So again, that's the idea here. Let's see which way we go. Is it going to be a full-on breakout, or do we see a false breakout first that reverses price the opposite direction? So keep that in mind here as we continue to compress. Taking a look at gold futures. Lastly, gold futures. It appears gold futures is on the verge, or on the verge of a big breakout opportunity, perhaps to the upside. It has been developing a rounded bottom in the intraday time frames, the 60-minute time frame. Most notably, in the previous session, we started to finally break to the upside, kind of failed. Now we're really starting to push through that 1715 zone right now, and above 1715, 1720 starts to open up 1740. And if we start to see 1740 here, we may begin to see a breakout from this range. Remember, I told you before, we're inside of 2 trading ranges right now. We have the larger range up here, and now we're inside this little range right now. So at the moment, if we can get above 1715, that opens up the top end of the small range at 1740. But if we start to see explosion through 1740, that opens up much more, up to 1770 to 1780. So there could be even more upside here. And if that's going to be the case, are we seeing a breakout from this range? And will that trigger the next 2 to 3 weeks of price action? So right now, watching this as gold starts to see quite a bit of strength in the intraday time frame. This move above 1715 looks promising here if it can continue to hold above that zone. But right now, all time frames looking quite bullish here for gold. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.